October 3, 2025. A chill in the air signals more than autumn. An economic storm is brewing, and its winds are already rattling markets from Toronto to Tokyo. President Donald Trump has reignited a trade war with Canada and Mexico, wielding tariffs as his weapon of choice. In a move that stunned global markets, he signed sweeping new orders targeting America's closest trading partners. The U.S. imposed a sweeping 25% tariff on most Canadian and Mexican goods, plus 10% on energy imports. This includes everything from lumber and steel to oil and natural gas, sending shockwaves through commodity markets worldwide. For decades, North American trade flowed freely, underpinned by NAFTA and later the USMCA, creating one of the world's most integrated economic zones. Now, new barriers threaten that integration, as border checks and tariffs slow the movement of goods and disrupt established supply chains. The White House claims these tariffs will revive American manufacturing and force better trade deals, promising a return of jobs and industry to U.S. soil. But the conflict escalated. New tariffs hit Canadian softwood lumber, kitchen cabinets, and furniture, critical exports that support tens of thousands of Canadian jobs and billions in trade. These measures, effective October 14th, are a direct assault on Canada's economy, triggering immediate layoffs, business closures, and a sharp drop in the Canadian dollar. An escalation clause means tariffs could double if no deal is reached by January 2026, putting even more pressure on already strained negotiations. This is economic brinkmanship, not just negotiation. Both sides are locked in a high-stakes game, with billions of dollars and millions of jobs on the line. The U.S. bets that pain will force its neighbors to concede, but American workers and businesses are already feeling the sting as exports dry up and costs rise. But the pain is spreading at home too. Supply shortages and rising prices are hitting American consumers, fueling inflation and frustration. The tariffs are already disrupting supply chains and raising costs, not just in North America, but across the globe, as companies scramble to adapt. Canada is refusing to back down, rallying public support and seeking new alliances to weather the storm. The stage is set for a high-stakes showdown that could reshape North American trade and send ripples through the global economy. The world is watching as economic warfare replaces diplomacy, and the fate of international markets hangs in the balance. Canada struck back fast. Prime Minister Trudeau's government announced retaliatory tariffs targeting politically sensitive U.S. goods. Suddenly, American products became pricier for Canadians, a classic tit-for-tat. But this conflict sparked something deeper, a surge of national pride. Canadians are buying local, shunning U.S. brands, and vacationing at home. The tariffs, meant to weaken Canada, have united it instead. Ottawa pledged $1.2 billion in aid to support its lumber industry, keeping businesses afloat and workers employed. This is about more than economics. It's about sovereignty and self-reliance. The psychological impact is profound. Trust in the U.S. is eroding. Canadians feel betrayed, and cross-border travel is dropping. The trade war is redrawing not just economic lines, but the mental map of North America. A continental divide is growing, and it may take years to heal. Canada is determined to defend its interests, no matter the cost. The era of easy partnership is over. Amid the turmoil, Air Canada's stock is soaring, defying expectations. Investors see opportunity as trade routes shift, so might travel and cargo patterns. Air Canada's global network could capture new demand as businesses look beyond the U.S. The market is betting on the airline's adaptability and resilience. But the reality is harsher bookings for U.S. flights are down 10% since April. Business travel and tourism to the U.S. are shrinking. The optimism is based on future potential, not current performance. Air Canada faces a paradox: rising stock, but falling revenue on key routes. Investors are buying a story of reinvention. Management must now deliver, pivoting to new markets while weathering immediate losses. The challenge is real. Can hope be turned into results? The airline's future depends on its ability to adapt quickly. In this trade war, even optimism is a risky bet. This trade war isn't just numbers, it's people's lives. Tariffs act as hidden taxes, raising prices for everyone. In the U.S., higher lumber costs make homes less affordable. In Canada, Furniture makers face canceled orders and layoffs as tariffs price them out of the U.S. market. Small businesses and families are caught in the crossfire. Farmers lose export markets, truckers face delays, and even the film industry is hit by new duties. Uncertainty is spreading. Businesses hesitate to invest, consumers worry about rising costs, and workers fear for their jobs. The trust that once defined U.S.-Canada relations is eroding. Tariffs meant to protect are causing widespread damage. The pain is immediate, personal, and growing. The trade war's true cost is measured in disrupted lives, not just lost dollars. The Trump tariffs were meant to protect U.S. industries, but the blowback is fierce. American businesses and the U.S. Chamber of Commerce are sounding the alarm. Tariffs on Canadian lumber and aluminum are hurting, not helping, the U.S. economy. Home builders warn of worsening housing affordability as domestic supply can't meet demand. Retailers like Wayfair and Williams-Sonoma face higher costs and falling profits. Farmers lose access to Canadian markets, compounding earlier losses from China. The reality, U.S. and Canadian industries are deeply intertwined. Tariffs treat partners as adversaries, disrupting supply chains and raising prices. American workers and consumers are paying the price. The trade war is a self-inflicted wound, undermining prosperity. Instead of protection, it's creating chaos. The U.S. economy is now at war with itself. Air Canada's rising stock is a lesson in the power and peril of investor optimism. The airline must pivot fast, develop new routes, strengthen cargo, and reduce U.S. dependence. Declining U.S. bookings threaten its bottom line. The company faces a delicate balance, short-term pain versus long-term vision. For North America, the stakes are even higher. The trade war is eroding trust between two nations bound by history and geography. Rebuilding that trust will take more than removing tariffs. It requires renewed partnership. Industries need stability, not constant threats. The path forward is uncertain. Will leaders de-escalate, or will the divide deepen? For Air Canada, survival depends on agility. For the continent, the choices made now will shape its future for decades. The trade war has not only affected North America, but has sent ripples across the global economy. In this chapter, we explore how different countries are responding to the new economic landscape and what it means for international trade.